to RV Academy. In my earlier video, I told the various heads of income. That is income from salary, income from house property, income from business or profession, income from capital gains and income from other sources. These are the various heads of income given as per the Income Tax Act of 1961. Now, first let me take up income from business and profession. So, these two parts I will do it later. First I will start with income from business. To assess under the head income from business, the assessee must have invested capital. If he has invested capital and involved into the trading, buying, manufacturing, selling, then it has to be assessed under the head income from business. That means the capital investment is must and he should be involved into the various business activity like conversion of raw materials into finished goods or trading activity, selling activity, buying activity and any other type of activity which is earned, which is involved will be assessed under the income from business. Every year the businessman will prepare the financial statements whereby he debits all the expenditures and credits the income. While debiting the expenditures, he never going to discriminate the expenditure whether it is related to business or non-business. He writes everything into that. And incomes, he writes all the income, he never going to discriminate. It is not required for him. Whether it is earned from the business or from some other means, he credits into the statements. All incomes are credited. Whether apart from business income, he credits all other income like salary, like rent received from house property, interest received, dividend received, etc. will be credited to profit and loss account. Similarly, on the debit side, he writes all the expenditure whether it is related to business or non-business. So we have to take that profit and loss account statement or income statement and recompute. While recomputing, certain provisions are given. So it is very clearly given in this table. Please go through this table. First we take the profit as per profit and loss account. Then we are going to add all expenses, inadmissible expenses means expenses expressly not allowed as per the provisions of income tax. What are those expenses? Interest on capital. Any interest paid to partner's capital or proprietor capital is inadmissible. Partners or proprietor salary, any salary paid to the proprietors or partners is inadmissible. Personal payment of the proprietor in the form of drawings. If he has drawn certain amount debited to profit and loss account, it is inadmissible. All provisions and reserves, any provisions made means out of profit certain amount is kept aside to meet the future contingencies like provision for income tax, provision for legal charges, provision for expenses. All such provisions are added back to the profit. Any reserves, any amount kept aside for future contingencies like general reserve, dividend equalization fund or any other fund transferred to fund is inadmissible. All taxes except GST, excise duty is inadmissible. Then capital expenditure, any asset purchased, proprietor or partners or businessman is treated that as a revenue expenditure and debited. Income tax will take it as capital expenditure and that will be added back to the profits. Fines and penalties, any fines paid or penalties paid is inadmissible. Overvaluation of open stock and undervaluation of closing stock is inadmissible. Depreciation charged in excess of the provisions of income tax. In the income tax, the provision for depreciations is given. Chart of depreciation, how much depreciation for various assets is given. For example, building, residential building 5%. Intangible assets like goodwill, patents, copyright 25%. Suppose if he has charged more than that, that excess amount will be added back, or depreciation, whatever is charged in the profit and loss account should be added back to the profit. Later we can deduct as per the income tax provisions. Any payments in the form of donations, charities is inadmissible. Donations or charities is inadmissible. Bad debt provisions is inadmissible. All these are the various expenses which is debited earlier by the proprietor, but income tax will not allow this as an expenditure. These are all expressly not allowed. We should add back to the profit. And less incomes charged separately. As I said, you will not discriminate the income. All incomes are credited to profit and loss account. Those incomes which is not to be assessed under the head income from business will be deducted from the income. That is rent from house property, profit on sale of asset, interest on capital credited to profit and loss account, dividend received credited to profit and loss account, bad debts recovered disallowed earlier, winning from lotteries. Just you look at here, rent from house property, he has written on the profit and loss account credit side, it should be assessed under the income from house property. Profit on sale of asset goes to capital gains. Interest on deposit, dividend received, bad debts recovered, disallowed earlier, winning from lotteries comes under the head other sources. It cannot be assessed under the head business or profession. Henceforth, we are going to deduct all these incomes from the profits. Then, business expenses allowed, not debited to P&L account. It is allowed by the income tax, but proprietor is not recorded. Now we can deduct. That is called to be the bad debt. Depreciation on capital assets or depreciation as per the income tax provision, as I said earlier, or bonus, commission, etc. paid to employees is allowed. So we have to minus this. The final answer will be taxable income from business. Now you can see the chart also, which is also given here, the depreciation chart. What are the various assets and how much depreciation should be provided in the act. So this is one simple format for working out the answers. If you are thorough with this particular format, you can easily work out the answers. In my next video, I am going to work out problems on income from business.